So we've got Nigerian equities finishing the first quarter, January to March, with about a 10% index return. The Naira was also steady on the US dollar, while inflation was tepid in the first month of the new year. Now, much of this is changing, by the way, with expectations from investment and security services group Comercio partners that Nigeria's real GDP should decelerate in 2022, and the end of the earnings season could bring about a period of speculations in the equities market, bringing the macros and the markets together to make a sense of what lies ahead. Is Tosin Osunkoya, a co-managing partner at Comercio Partners, and he joins me live now from our Lagos studios. Tosin, a good evening to you, and great to have you here on the show. My apologies, we couldn't be sitting together face to face as always when you come around. So today we're doing this virtually speaking. Thank you. Give me a quick rundown of the first quarter from a macroeconomic perspective at Comercio Partners.
Good evening, Boason, once again. I think for us, it's not really a good story in the first quarter of the year, largely due to the numbers coming out of Nigeria in the first quarter. Of course, we still have inflationary pressure. The last count was at 15.7. We have the currency struggling at the moment. You would agree with me that Naira at the black market, the parallel market rather, has struggled. We've lost about 4 to 5% since the beginning of this year to date. Obviously, you've heard about the depletion in the external reserves as well. And that has come down by almost $1 billion. That's about 2 to 3%. From a period or from a level that we were all celebrating, and that was about $40 billion. I mean, if you look at all of these, it's not been a good story in quarter one. However, having said that, I mean, if you go down into the markets, there are few blessings, let me put it that way, that we could celebrate. You've just mentioned now that, the all-share index recorded about almost 10% in quarter one. The fixed income market has also done very well in terms of the performances, across the curve. So by and large, I think for me, barring what is happening, the Russian and Ukrainian war, I think back home here in Nigeria, it hasn't really been a doom and gloom. I think there's some blessings that we can celebrate. Again, you need to be concerned about the energy cost, right? Because that, again, is going to increase our inflationary pressure moving into quarter two.
In quarter two, Tosin, the SEC says its quarterly capital markets committee meeting will take place tomorrow, thus a Wednesday, by the way. So what are some issues that needs to be addressed that we need to look at in Nigeria securities market space?
I think it's a body that on a quarterly basis, they review, through the various committees that they've set and they've established to review the trends and the activities in the capital market. They have product development, they have market enlightenment, they have advocacy. For me, I think some of the few things that they are certainly going to discuss would be the emerging trends in the capital market. Okay, and how to continue to encourage participation, particularly at the retail end of the market, because we haven't really seen so much participation in that space. The retail market, particularly if you look at the young millennials, they do not have so much grasp of what the capital market entails. So a lot of education needs to go into that space. A lot of them are looking at the US global market, and they're also looking at the cryptos, the digital assets. And for us to attract those young minds, we need to do a lot more enlightenment and provide them with product innovation. I know that one of the things that we'll be looking at will be the digital investment platform. I know of a few institutions that have signified interest and looking for licensing for them to operate as a digital investment platform. So I think that by and large, those are the things that we will be discussing. One other thing that I think is very critical is the SEC and FMDQ charges, which I think that would, to a large extent, would limit the participation of the players in that market, because a lot of them have actually complained about how those charges have discouraged, massive trading in that space. So I think that those are the things that they will be discussing at that meeting.
Here we are, Tosin, at the start of the second quarter. What's your macroeconomic outlook on the second quarter currently underway? What are your permutations at Comercio Partners?
I think for us, Commercial Partners, yes, it's a local brand, but we have a global perspective. We are also concerned about the fact that the rising crude oil price hasn't really accreted to the external reserve. So again, we need to be very mindful of that and how that hurts Nigeria. Having said that, we have, like I said, we have a global perspective. So what we've been selling or preaching to most of our clients will be protection of your investments and your portfolio. The depletion in the depletion in the external reserves would limit the ability of the central bank to defend the naira. And when that happens, you could see naira, hitting the roof. So it's important that when some of your investors are in one particular currency, you want to advise them to diversify the currency away from the naira. So again, it's something that, yes, you might not sound patriotic about it, but if you don't do it, somebody else is going to do it. So it's important that you let them realize that they could diversify their portfolio. So we're looking at, diversification of sovereigns outside of Nigeria. Some of them have good bargaining entry levels that you could go into. Outside of that, you might also want to look at taking positions against the back end of second quarter into the end of the year. I think that the banking sector will do well this year on the back of, we expect that interest rates or yields on government securities should begin to rise on the back of the amount of funds that the debt management office will come into the market to borrow. We expect to see a reversal of the bullish trend that we've seen in quarter one. So if that happens, the banks will literally enjoy, the high yield on government securities, and that would translate to better returns coming out of the banking sector. I think that the oil and gas sector as well will do well, obviously on the back of what is happening in the East. We think that what they've experienced in quarter one is not the end. That might go into quarter two as well. The FMCGs, we believe that, yes, economic activities are beginning to pick up. The supply challenges are still there, however, but we believe that the FMCGs too will do well. The telcos, you would agree with me that internet penetration is on the rise. So the telcos is another area that I think that investors should look at. So as an investor, what we advise our investors are likely to diversify their portfolio. You could have a good percentage in local instruments and have others in foreign instruments.
You talk about, well, let's talk about the banks a bit. A few more banks have gone Holdco, JITCO, and Access Core now this year. What's your outlook on these financial supermarkets as they move away from traditional commercial banking as a listed company now to Holdco structure? How should investors play these two, for example, alongside other names such as FBN Holdings, Stanbic IBTC, and FCMB Holdco?
I think it's a good competition in that space. I believe that any brand, whether it's a bank or it's an FMCG or it's a telco, you need to evolve with time, especially when the operating environment is evolving as well. So most of the banks are moving away from their traditional role as a traditional lending taken from the surplus sector and given to the deficit sector to other financial services. And you need to begin to look at that because, again, if you're able to dissect their financials, you'll see that their interest income is actually hurting. They are now moving into a fee-based income, non-interest income. And to do that, you need to create an ecosystem. So I think that's basically what they're trying to do. Diversification from traditional financial institution and create an ecosystem. You want to create a financial system where it's called a one-stop shop. So any manner of financial services at all that you want to render as a bank, you are seen to be able to render or offer those services. And you can only do that when you begin to build capacity in that area. So I think the old co structure is a welcome idea. If I were in any CEO's shoes, that's exactly what I would do.
You are a co-managing partner at Comercio Partners, so you're already a CEO. Tosin Osunkoya, thank you so much for your time. We really appreciate your time on the show tonight. Have a great evening and see you next time.